As promised, Kirk is back with his stock column for Morningstar.ca. This month he wrote about Nexen. Kirk, thanks so much for joining me.
Glad to be here.
So Kirk, why don't we start, why don't you tell me about Nexen's bid? We'll start with that.
Okay, well, Nexen received an offer from a Chinese state-owned company called Chinese National Offshore Oil Corporation. Bit of a mouthful. CNOC is a shorter way of saying that. The offer was pretty beneficial if you held Nexen shares prior to the offer. They bounced from around $17 up to the current price of $25. A little bit off the actual offer, which was $27.50 a share. Basically, that reflects the uncertainty that's currently involved with the shares, the deal actually getting approved by the government. And right now we're just kind of in limbo on it while we wait for the review to be completed. Initially it was supposed to be done by mid-November. It's been pushed back another 30 days. So we'll have no idea whether or not this is going to go through probably until December 10th when they rule on whether or not the net benefit test is passed.
Okay. And for investors watching who hold Nexen, what should they do right now? Should they be concerned? Should they hold on to it?
If I were an investor in Nexen right now, personally I would lock in the gain. Basically, if you'd held it from 17 up to 25, that's a massive capital gain that you can just lock in right now. And for the difference of $2, not to make light of that, that is a rather large amount of money, but the risk involved is probably just not worth it. The downside risk, if this doesn't go through, will be much more than the upside if it does. Unless you're very certain that this deal is going to happen, I would not, A, invest more money into the stock, and B, if I were holding it, I would probably sell.
Great, so I guess we'll all be watching on December 10th to find out how the government rules.
Yeah, for sure. I was reading some stuff today about basically they're trying to get some concessions from the Chinese state-owned corp. Basically for job promises, minimum levels of investment. The question is if they push too far on that kind of stuff in order to place the Canadian public and get everyone on board. On the other hand, they might end up pushing away the offer and they might just walk from it, and then it's just not going to go through and the share price is going to fall right back down. So it's going to be interesting to see how it shakes out. Everyone's going to be watching in the market across the oil patch and everywhere else, that's for sure.
Yeah, definitely. All right, thanks so much, Kirk.
You're welcome.
And remember to check back to Morningstar.ca for Kirk's monthly stock column.